What we've set up here is markets that are pricing in basically an all-in bet on the soft landing. Now, for those of you who are tracking the macroeconomy and markets, there's been this big debate: are we going to have a soft landing, a hard landing? Some people have talked about no landing. But the basic question is: can we have inflation come down closer to the Fed's target without having a meaningful slowing of economic conditions? That's the soft landing camp, right? A hard landing would be that economic conditions, growth would slow down a lot relative, in order to bring inflation down. And so I think when you look at market pricing, it really is a lens into how people are netting out in terms of their expectations of what's likely to transpire. And I think today, when you scan across markets, I really see an all-in bet on soft landing. So if you look at stocks, they're really not that far off of highs, particularly when you consider the fact that bond yields have risen considerably, which should have a negative impact on the stock price. And you look at bonds, which, continue to price in relatively low expected inflation. Oil prices are very low, actually. They're about as low on a real basis as they've been in a very long time. And the Fed's priced in to cut 100 basis points over the course of 2024, which really is Goldilocks. Not so many cuts that it would be indicative of a real growth slowdown, but cutting a little bit as inflation is expected to fall. So you listen to all that and you sort of say, ooh, all in. The markets are basically saying we're definitely having a soft landing where growth is super strong and inflation comes down and the Fed eases a little bit and everything is perfect. And the odds that happens they're not zero, but they're certainly not 100% the way it's priced into markets today.
Okay, so what I'm hearing is that even though the market has priced in what it's priced in, it sounds like you may have an alternative opinion or perspective on that. I'm just curious, where do you see the markets going from what you're looking at now?
Yeah, well, I think a lot of the things that I'm focused on is how it might be more challenging to achieve that soft landing scenario than I think many people or the markets expect. If you look back through time, beating inflation once you've already had a high inflationary period without a slowdown in growth is actually quite challenging. Very, very rarely does that occur. And so what that means from a market's perspective is that in order to bring inflation down to the Fed's mandate, odds are we're going to have weaker economic conditions than are currently priced into the equity market, which would be bad for stocks. And then on the flip side, we probably need to have tighter monetary policy than is currently priced into the short rate markets, where the Fed holds higher for longer than those 100 basis points of cuts priced in to 2024. And so you put that together, it's actually probably not a great environment for both stocks and bonds. And I know a lot of folks have already felt the pain of 60-40 underperforming over the course of the last 18 to 24 months. But until we bring inflation back durably to the Fed's target, we're unlikely to see that 60-40 portfolio perform anywhere near as well as it has, over the course of the last couple of decades.